Let's turn our attention now to a number of big tech and mega cap stocks that have been soaring this year. We've got Yahoo Finance Jared Blikre to break down the charts for us. Jared.
That's right. And let's take a look at some of what's happened this year, especially in the mega caps. This is the Nasdaq 100, and you can see Apple up over 30%. So is Microsoft, Alphabet, and Amazon. Then you take a look at Tesla. It's up 51%. Nvidia and Meta have more than doubled. So what has been going on? This is the mirror image of what we saw last year when tech got obliterated and we saw energy soaring. Well, it comes down to market concentration. Actually, over the last couple weeks, there have been price cuts, Fed price cuts, Fed rate cuts priced out of the market. So the market is no longer expecting a hard landing. It's expecting more of a soft landing. And in this environment, it's thought that the mega caps will do a little bit better than other things. Now, this is a Nasdaq 100 versus a Nasdaq Composite going back about 30 years. And what stands out are a couple of things. First of all, the chart is from the lower left to the upper right. This means that over time, the Nasdaq 100 has been gaining over the Nasdaq Composite, which has about 3,000 issues. There are a number of reasons for this, and part of it has to do with market superstructure we don't have time to get into, but nevertheless, the trend is already up. Secondly, we can see within this band, we kind of go within a range here. Right now, we are at the upper end of this band, meaning that there are Nasdaq 100 is more in favor than it would have been otherwise at the bottom here when you had the Nasdaq Composite more in favor. But look at this. This move here stands in stark contrast to what happened in the dot-com bubble and crash. That was a huge outperformance by the Nasdaq 100 there in just a handful of names like Cisco, Oracle, Intel, some of them we know. Yahoo was one of them back in the day, even WorldCom, which ended up being a fraud. But nevertheless, once that was cleared, we kind of settled back into a range here. So I just want to show what's possible. We are nowhere near yet back in bubble territory and probably a little bit early for that anyway. I do want to show you what's going on also now that the Fed has paused. Now, historically, when the Fed pauses, that does give the market a little bit of impetus to keep rising, and it's a little bit non-intuitive. Here's the Nasdaq 100 going back 20 years, and the Fed paused in 2006, in mid-2006. And then from that time forward into the global financial crisis, stocks actually rose into the time that the Fed made their first cut, which is somewhat not intuitive. You would think cutting, well, that's going to actually help the markets out. But I'll tell you what, guys, it was a signal that there was a hard landing to come. So that was actually the beginning of the end there. So suffice to say, now that the Fed is on pause, stocks could easily rally as long as the Fed remains on pause. Will that be a month, 2 months, 3 months, 6 months, a year? Just want to point out that these things tend to run longer than we normally think about. So this could be a 3-year cycle of which we're maybe only in the first half of right now.
Interesting to get that historical perspective. Jared Blikre, as always, thanks so much for that.